This is Andy Chambers. Thank you for joining me for today's update. Today I'd like to do a monthly update of the YouTube recording I did in early January 2013 that was based on the monthly charts at the end of December 2012. The video is posted on the TradeWinds1 YouTube channel. At that time, option traders could have purchased options as far out as January 2015. I know most traders like to trade short-term, but some of these charts show that trading long-term can pay off very well too. We'll look at each of the monthly charts and see how things turned out. Well, this is what MDY, the S&P Mid-Cap ETF, looked like then. At that time, the January 2015 200 call cost about 12. This is what the mid-cap looks like now. As you can see, it went way beyond the targets. I put the parabolic indicator on the current charts. The parabolic is a trend following indicator. It's pretty good at cutting losses, and it's very good at letting profits run, like it did with MDY. By the way, the 200 call that cost 12 has been as high as $49.50. Further out of the money options cost less and had an even higher percentage return. This is what IWM, the small cap ETF, the Russell Small Cap ETF, looked like at the end of December 2012 when we made the YouTube video. And here's IWM now. Like MDY, IWM went way beyond the targets and the parabolic indicator is still long. Here's the XLI chart from the January 2013 YouTube video. And here's XLI now. As you can see, XLI hit both targets. Here's XLB then. And here's XLB now. It wasn't as explosive as MDY and IWM, but it still hit the target. This is what EEM looked like then. At the time, the setup looked about as good as any of them. Here's the current chart of EEM. It wasn't a disaster, but EEM was definitely a dud. The current price is below the price when we mentioned it. EEM was the poorest performer of all the charts we reviewed on the January 2013 YouTube video. This is the chart of Deere & Company that was on the video. This is what Deere looks like now. Deere hasn't done much yet, but it didn't break support, and at this point, it's still looking up. This is what EMR, or Emerson Electric, looked like then. And this is what Emerson looks like now. As you can see, Emerson hit all three targets. This is what HOT, H-O-T, or the Starwood Hotels and Resorts looked like then. And this is HOT now. HOT hit both targets and kept going. Here's JPM then. And this is JPM now. It wasn't a rocket shot, but it did hit all three targets. Here's Oracle then. And this is what Oracle looks like now. Oracle didn't reach the second target, but the high for the rally was 25% higher than the price when we posted it in early January 2013. And it could still hit the second target. Here's another good one. Here's Tel then. And here's Tel now. What a run! TEL went way beyond both targets. Here's VAR, or Varian Medical Systems, then. This is what Varian looks like now. It didn't run like TEL, but it did hit both targets. Here's AXP, then. At the time, AXP was trading at 57.48 with targets of 65, 70, and 75, and support at the November 2012 low of 53.02. The risk was less than $5. When we made the January 2013 video, the price of the AXP 2015 60 call was about $6.50. As you can see, AXP rallied well beyond all three of the upside targets. The option that we mentioned, the 60 call, that was about $6.50 back then, recently hit $33.69. CAM was 56.46 at the end of December 2012. The targets were 63 and 70 with key support at 33.38, the low marked by the arrow. CAM hit the first target, but it didn't reach the second one, and it wasn't one of the top picks. But it still made money, and it's still going up. CAT was 89.61, and we had a target of 110. CAT hasn't been a stellar performer either, but it never broke support, and it's been as high as 107.40, and it's still chugging along. Here's another good one. Here's Halliburton then. At that time, the HAL January 2015 35 call cost $6.40. Now it's close to $30. As you can see, HAL went well beyond the targets. Here's GCI then. And here's GCI now. As you can see, GCI hit both of the targets and kept going. We reviewed 17 stocks and ETFs in the early January 2013 video. 5 of them went way beyond the targets. 7 more hit the targets, and in some cases, there were 3 targets to hit. 4 stocks didn't hit all the targets, but they still have a chance, and a couple of them were 20 or 25% higher than they were on the Jan 13 video. There was only one dud. That was EEM. As I said, you can still find the video with the same stocks in the same order on the TradeWinds 1 YouTube channel. It was posted with my name, Andy Chambers, in early January 2013. Thank you for your time and attention. Good luck and good trading.